Good morning, everyone, and thank you for attending today's webinar. I am Bernard with Insurance Advisors Direct, and we're going to talk about life insurance product skills training. But first, let me just show you some of the things about IAD and the support that I can bring you, that our strategic partner, Chris Schieffer, can bring you. As you see from product education and training, like what we're doing today, from carrier appointments, case analysis, sales tools, materials, marketing, application review, application creation and review, application review and submission, and then that back office support for you, business processing support. So we have a gamut of things to do to help you with your life insurance business. And with that, and this is something new with Insurance Advisors Direct, and we just created this. Big news for all of our IAD partners. We are giving a trip to our top 10 producers to Puerto Vallarta in April of 2023, as you can see. So folks, go on our webpage at iadbrokerage.com/incentive trip, and you'll see the fine details to how to qualify and all that good stuff. And what we're going to get in today, this will actually help you qualify for this trip, and we're looking forward to you life folks qualifying for this trip, because I want to see you guys there and buy you a round of drinks. As an additional incentive, if you write your first piece of business, your life business, with one of our select carriers, you'll receive a token of our appreciation. So just, some things that we want to do to keep you motivated and, wanting to write life with us. So to get into this, you see a cell phone here. As you know, way back in the day, maybe 10, 15 years ago, cell phones were just pretty much one-dimensional. I mean, it was just there for calling. So today, we have our smartphones and all these different apps, and we can liken that to life insurance. Life insurance back in the day, just pretty much it was just used as a death benefit. But today there's many different uses for life insurance. It's infinite banking, and folks heard of tax diversification, long-term care hybrids, wealth legacy, just a whole bunch of uses of life insurance. And we're going to have our good friend Chris Schieffer, one of our strategic life partners, and he's going to talk about life product skills training. So folks, here we go. Chris, my friend here, take it away, buddy.
Good morning, everybody. So today what I wanted to talk about is an idea. Okay, it's an idea to hopefully bring some simplicity and some help to help you get your clients to discuss the idea of life insurance without fully realizing that it's something they're talking about. Okay, I'm sure many of you go out there, you see your clients, whether you're talking to them about Medicare, whether it's annuities, investments, whatever it might be, the idea of life insurance sometimes becomes a topic that's a little bit sticky, a little bit scary, okay? And what I'm here to tell you is it really shouldn't be, okay? It's really the base of any full financial plan. But like Bernard had said, life insurance today can be used in so many different avenues. You don't need to think of it simply as a tool for covering, that cash that's needed at the time that somebody passes away. And so I'm sure sometimes when you're out there working with your clients and doing what you're doing, you come to this understanding, or you uncover that these clients have lazy money. Right? And what is lazy money? Today, people, they might have a bunch of money socked away in a money market or a savings account, sitting in a CD, Or they might have an old life insurance policy that's just performing poorly that has some cash in it, okay? But a bunch of people have this money just sitting there and it's lazy. It's not doing anything for them. And you want to figure out a way to talk to them and see if you could help them with this money, okay? And so what I'm going to talk about, and there's many different ways to have this conversation, and I think Bernard and me were talking about maybe doing this presentation a couple other times in sort of a different format. But today, what I want to talk about is lazy money. Those clients that you run into that the age doesn't really matter, but let's say we're running into people that are, 55 to 70 years old in this range, okay? And you go through and you're doing what you're doing and you find out they have this lazy money. So you want to have a way to ask them, why they have that lazy money, what it's all about. And so here's what we're going to go, and I'm going to go through my presentation now with you now that I kind of set up who we're talking to and what the purpose is. What I'd like to ask each of you to do, and I should have done this at the beginning, if you could grab a piece of paper. All right, I'm going to take a minute here, let you grab a piece of paper and get a pen, because I do want you to write down a couple of things here. So I'm just going to sit here and wait a minute or two and just kind of blab about a few things. Bernard, are the majority of the people on this call today, is Medicare the core part of their business? So are we seeing a lot of people that are like 65 and above, right?
Mixed crowd today.
Okay. All right. Okay. So hopefully everybody had a chance there to get a piece of paper. So let's go ahead, and what we're going to do is imagine yourself sitting with your client, okay? And imagine that you go through, you do what you do, and you find out they have this lazy money sitting there. And what do most people today do, right? They're like, man, rates are so low. They're not happy with what they're doing, the whole deal. Well, what we want to accomplish, or what we want to do, is we want to design an atmosphere with our client that the client is able to design their ideal savings account, okay? So I want you to write that down at the top of your piece of paper. Write down ideal savings account, okay? Amanda, I see what you wrote up there. Yeah, you're just seeing, Bernard, I don't have a slide with this presentation because I was having trouble figuring out how to write on the whiteboard with everything. So I need you guys to write on a piece of paper. We could talk individually if you want to have help with that too. Bernard's going to talk about that. But so what we're trying to do is create an atmosphere where your client wants to tell you what their ideal savings is, right? So we want to talk to our client about repurposing that money, okay? And when we talk to them about repurposing that money, what we want to do on this piece of paper, what you're going to do is you're going to set that in front of your client, and you're going to write down the numbers 1 through 7. So if everybody would right now write down the numbers 1 through 7 on a piece of paper, okay? Now, when we're doing this, we might have to actually coach them through this, okay? Might have to give them little bits of information, all right? But now that we got where our client's sitting there, they know that we're focusing or talking about their lazy money that they have sitting in the savings account, a CD, a money market, right? What we want to talk to this client about at this point is hey, on that particular bucket of money that you have, if you could create your ideal account, what would the features of that account have? Okay, what would the features be? And this is where we have our 1 through 7, right? So what we want to do here is then ask our client, like if I were to ask Bernard, if you were able to build your ideal savings account, right? If you were able to put together your ideal account, what's the top feature that you would like that account to do?
Show me guarantees. I want it to be secure.
Okay, so Bernard wants it to be secure, right? So what do you mean by that, Bernard?
I don't want inflation to eat up my investments.
Okay. Or you don't want, like, when we say we want it to be secure and have guarantees, right? We don't want any market volatility. Is that what we're getting at?
Exactly.
Okay.
Exactly.
All right. So for number one, everybody, let's write down market volatility. We want no market volatility. Now, Bernard didn't know that I was going to put him on the spot like this, just so everybody knows, but I kind of wanted to do this way. Now, let me ask you, Bernard, what else would you like for this account to do?
I want to see some growth. I want my money to accumulate.
Exactly, right? You want to make sure the money grows. Now, I got a question for you. If you could tell me about that growth, what would be a percent that you would like it to grow at?
At least 8%.
8%. Okay. So for number two, let's write down growth. And then let's put 8% there. Everybody, I want you to know it doesn't matter what they say. It doesn't. We just want to get them talking, okay? Okay, Bernard, this is great. So right now what we're looking at in this account is we don't want it to lose money, right? We want it to grow. What else would you like to have as part of this account?
I want a death benefit for my heir. I just want to pass on a legacy to my heirs.
Okay. All right. So that's good to know, right? So let's write down legacy. Okay. So Bernard, let's do this. Let's review so far what you've said. Okay. So what you've said is, in a perfect world, for this $100,000 that you have sitting over in this savings account, you'd like to have it grow at 8%. You don't want to have any market risk, and you'd like to make sure that it's very easy for this to leave a legacy to your heirs and the family that's left behind. Is that correct?
That's correct.
So I got a question for you. Is there any place, right? Let me ask you, is there any place that you could get an account to give you all three of these? Bernard, play stupid.
I don't know. You tell me. I really don't know. I don't know.
Okay, great. Well, let's go ahead. Let's go on to number 4, okay? So what else would you like to have?
I would like to be able to use the money for whatever purposes if I need it.
Okay, so what you mean there, how about liquidity? Is that what you mean? You'd like to have some liquidity to get at the money to use for other things? You want to buy a house, you need to buy a car, the roof blew off the house and the homeowner's insurance isn't covering it, whatever it might be?
Yeah.
Is that fair?
That's fair.
So let me ask you, how much of that do you want liquid? If we were to look at a percentage of it.
I don't know, maybe 10%.
10%? Is that it?
Yeah.
Okay. So everybody, let's write down liquidity, and let's write down 10%. Now again, folks, I want everybody here to know we don't care what they say. They could say 10%, they could say 15%, they could say 100%, okay? We just want to get them talking so that we know what's going on. All right? All right, so let's talk about something else, right? What would be, what are we on? Are we on 6 now?
5.
On 5, okay. So let's talk about what else you would like there. Is there anything else that you could think of that you want in this account? Any other features?
Well, one, I like it for it to be affordable for me. If I have to pay, I want to be able to afford it.
Okay. Well, Bernard, let's remember that we got this 100,000 sitting over here that we're just going to take over, and that's what we're going to use. Now, if you don't want to put the full 100,000 in there, we could go ahead, put 75 in, and you could keep the other 25 in the bank, whatever you want to do. But what if we looked about this, right? What about taxes, right? How would you like, would you like this money? How would you like it to be taxed? Do you want it to be tax deferred? What do you think?
My thinking is I don't like paying taxes, so if this can be tax-free, I want it to be tax-free.
Okay, so how about the earnings of this account while it's sitting in there? You want it to be tax deferred, most likely, right? You don't want to pay taxes on the money.
Yeah.
All right. So everybody, let's write down tax deferred growth. All right. So Bernard already told us he also, when he takes the money out, for number 6, let's write down he wants tax-free distribution out of there. All right. So, right, that's huge, right? When the money's sitting there, let's compare this to a CD, right? If the money's sitting in a CD earning interest, what happens? You get a 1099 every year. If the money's sitting in the savings account earning a paltry interest rate, what happens? You get a 1099 every year, right? This person says, hey, Bernard's like, man, I don't want to be paying taxes on that money. And to boot, I don't want to pay taxes when I take it out. Great. Great. Now, is there anything else that you would like for this to put down here?
I can't think of anything else. I mean, that seems to cover it for me.
Okay. What about benefits? What about long-term care? Is that a worry that you have?
Well, yeah.
Okay. So how about we write down long-term care for number 7? So let's go ahead, Bernard, and let's recap this here, right?
Mm-hmm.
In an ideal situation, if you could build your own account, okay, you'd want to have an account that has long-term care, right? That has
Yes.
the ability to leverage dollars for long-term care. You want to make sure that you could pass it on to your family as a legacy, simple and easy. You want to make sure that the money grows tax-free, and when it comes out, or grows tax-deferred, when it comes out, you want it to be tax-free, right?
Yep.
What else did we talk about? We talked about liquidity. You want to be able to get at some of your money in case there's some other opportunities that come up for you.
Mm-hmm.
You want it to be safe. You want guarantees. You don't want to lose any money, right? You don't want market volatility, but you definitely want it to grow. And you said you want to be around 8% ideally if you could, right?
That's right.
Is that everything?
That's everything.
All right. So let me ask you something. Where can you take your money and get all 7 of these features in an account for yourself?
I would think a life insurance policy.
Bernard definitely would think that, but our average Joe that we're talking to is not going to think that. They're going to not know that, right?
That's
So let me
right.
ask you another question, okay? Let me ask you another question. If an account like this exists, when would you want to know about it?
When would I want to know about it? I would want to know about it, now.
Okay. So let me ask you this. If this account existed, okay, how much of your money would you want to put in there? That 100,000 we're talking about, how much would you want to put in?
I would put in, I'm an aggressive guy. I would put in that for 100.
Okay. So here's the real question, Bernard. Okay, the real question is this. If this is truly what you want, right? If you truly want an account that has the ability to be liquid, grow tax deferred, come out tax free, has the ability to have guarantees where you don't lose any money, but you're still able to get those market-like returns, right? You're still able to get 8% possibly, has the possibility of giving you that. You could go ahead and leave a legacy, tax-free distribution. You could have living benefits in the form of long-term care, right? If this is really what you want, why is it that you're not currently doing this?
Guess because I never known about it.
Never known about it. So here's the deal. There really is a vehicle available that is going to be able to potentially give you that 8% and everything else. So one last question. When do you want to get started?
Well, now.
All right, that sounds really good. So folks, that right there, there's a lot of bits and pieces in there, and I don't know how much you were able to get written down, and we could go back over this, but there's an idea that when you're sitting with somebody and you're talking to them, me and Bernard did not And you can see Bernard's face right now. He can tell you, we didn't practice this. He didn't know what I was going to
I
do.
did not know.
Okay. And that went fairly smooth. Now imagine you're talking to somebody that doesn't know that you're going to be talking about life insurance or something like that, right? They're going to play into your hands a lot more where it's a little bit easier, okay? But here's the situation, right? Some people, let's take this a step further, okay? So, Bernard, you're ready to get started right now, right? You want to get doing this?
Yes.
Okay. What happens, folks, is most people are going to say, well, what type of account is this? What is this? Well, we all already know because we talked about it, so that kind of didn't come up. But when people ask, well, what is it? Write this down. I want you to write this down, everybody. This is what you say. Well, it's a 7702 plan. After you say that, they're going to say, what is that? You're then going to say, it's the tax code that tells us that we could allocate funds to cash value life insurance to accomplish these benefits. And I want to tell you, Bernard, this is what clients in your situation are able to take advantage of if they qualify. Remember, everybody, he's our client in this thing, right? So if you're talking to Tom, John, Debbie, Lisa, whatever it might be, you just say to them, and Lisa, this is what clients in your situation are able to take advantage of if they qualify. Now, I'm going to take this a step further for everybody. There are going to be some people that are still going to question life insurance. Why life insurance, right? I always heard that wasn't a good place to put your money, right? These are things that you might be thinking that they're going to say. Honestly, not a lot of people do, but some people do. But here's a story that you then could go through and let them know. Bernard, have you heard the drill bit story?
No.
All right. So let me ask you a question, and everybody please suck this in. If you want to write down bits and pieces of it, again, we go through it at another time with you. But Bernard, you got a Home Depot over where you are, right? Or a Lowe's or an Ace Hardware, right? How many drill bits do you think any of them sold in the past year?
I really have no idea.
Well, what do you think? Give me a number.
Probably about 1 million.
So 1 million people came in and bought a drill bit, right? I mean, you think about all the Home Depots across the country, the world, whatever, 1 million drill bits, right? Here's my question to you, Bernard. Mm-hmm. How many of those people do you think really needed a drill bit?
Maybe 75% of them.
Sure. I'm going to tell you this. I don't think a single one of them needed a drill bit. They didn't need a drill bit. You want to know what they really needed?
What's that?
They needed a hole. They needed a hole in the wall. They needed a hole in their car. They needed a hole in a chair. They needed a hole someplace. So here's the deal. What's the best tool to put that hole in that wall? The drill bit, right? So Bernard, where's your money currently, right? Where is it? Is it sitting someplace in a tool, or do you have that's able to accomplish all the things that you want done? Is it there or no?
No.
Everybody on the phone here, Bernard, the tool in this case is the life insurance, okay? Mm-hmm. The life insurance is the tool that's able to accomplish everything that Bernard/client said they wanted. Okay. Now, when you're done with all of this, one of the things that we can do is this, right? We can then take this a step further. And if you look at your ideal savings account that we put together, right? And we look at that, and number one, what did we write down for number one?
No market volatility.
All right, so let's go ahead and let's put a check mark, if you can, on your sheet of paper. Over to the far right of that piece of paper, write down current account or bank account or something like that, okay? So you don't want to lose money, right? When you look at using life insurance versus the bank, which one's better at doing that? Well, that's a tough one, right? We could probably put a check next to both of them right there.
Mm-hmm.
Okay. What's our next number? What's the next one we got?
Growth.
Accumulation, right? So we know that the check mark's going to go next to the life insurance here, right? There's no way you're getting 8% at the bank, right? All right. What else do we say? Liquidity, right? You got your money sitting in a CD. What happens if you want to pull money out of that? Is it liquid?
No.
Right? So check mark next to the life insurance. What else do we got there? We talked about tax deferred growth, right?
Mm-hmm.
Tax deferred growth, right? In the bank, what happens? You get a 1099 every year, whether you use it or not. So life insurance wins there. Let's put a check mark right there. Tax free when you take it out. Again, you're taxable at the bank. Life insurance is tax free. Put a check there. Legacy, right?
Mm-hmm.
If you have $100,000 sitting in the bank and you pass away, what's going to go on to your family? $100,000 plus whatever tax you didn't pay. Life insurance, that $100,000, what's it going to do? Let's just say that $100,000 buys you $300,000 of benefit. Which one wins? Life insurance.
Yeah.
Long-term care, right? This is the last one we put down. Again, that $100,000 in the bank, how much is it going to buy for long-term care? What's it going to help you do? The $100,000 to pay those costs, right? Over in the life insurance account, what is it? It's $300,000 of leveraged money for long-term care. Which one wins? Okay,
Yep.
Folks, what my goal today was, and we could ask some questions now, Bernard, but what my goal today was to give you a simple idea, okay? And I realize you might not have been able to write everything down and get everything taken in, okay? Might need to practice it a little bit, go over it, call Bernard. We could set up individual one-on-one appointments. Me and Bernard are willing to do that. As a matter of fact, I think Bernard said he's going to give all of you a call today and tomorrow to try to set up a one-on-one. But here's the deal. This is a simple, easy way that you don't need to change anything you're doing, okay? If you're going to go in and talk to somebody about something, do that. And if you uncover that they have some lazy money, work this conversation into your meeting and just ask them, right? Why do you have that money sitting in the bank? Would you like to do better than what the bank's doing? What are they going to say? They're going to say, yeah. And at this point, you step back or you lean back in your chair and you say, okay, so I'd like to ask you a couple questions, Mr. or Mrs. Client. If you were able to build your ideal savings account, what type of features would it have? And then go through this exercise with them right there, okay? Go through it and get them to say what it is. Sometimes, like I said, you might have to coach them and direct them to some of these things because some people aren't going to know what to say. They're going to say, I want it to grow, I want it to be safe, I want it to be liquid. Okay? Well, we need to layer on some other ones. And some other people are going to go in there and say a bunch of other stuff that they want, right? Have the conversation and let them say. And as you could see, the features that people say are always going to lead you back to the life insurance account. All right, so that's all I got today. I hope that that helps a little bit, Bernard. I don't know, we could do question and answer here for a little bit. I'll definitely take any questions.
Oh yeah, folks, if you have any questions, just type them in, and then Chris will be glad to answer them. All right, well, seeing that there are no questions, And as Chris stated, I will be giving folks a call today and tomorrow. One, talk about the presentation, and like Chris said, we want to meet with each and every one of you individually, go over this presentation again so we can get you out in the world, asking, and it works. Folks, believe me, it really works. Get there out there asking your clients, because it's lazy, man. Everybody has lazy money. So, well, not everybody, but generally your retired folks close to retire, they have that lazy money sitting around in a CD, in a money market account, in a savings account, that they need to do something with this right now. And actually, we're working on a case right now with one of our agents. Their clients has approximately 500,000 sitting in savings account, and we're splitting it up with a life insurance and annuity. Now, one, the solution actually fits the client's needs, but also on the back end, the agent is going to get a pretty nice payday for that. So no, this works. It really works. And Chris and myself, we're here to help you get through this. So like I said, we're offering ourselves to do these one-on-one presentations with you to get you up to speed and, take it from there. So with that, no, go ahead, Chris.
Bernard, one other thing I'd like everybody to hear. One of the products that we use a lot in this space, I'm not going to say anything more than what it kind of does. It's a simplified issue, single premium plan, okay? You get paid very, very well on it. And what it is it's 100% liquid from day one. It leverages money for life insurance and long-term care. And the client gets between 2 and 10% is how it works, okay? So even look at that guaranteed 2%, it's way more than what the bank's giving on a lot of stuff, okay? And the cool part about this product, and again, you got anybody with lazy money, when Bernard calls you, let him know about these opportunities because we can put together some case designs for you. But the cool thing is it's very simple. It's 12 questions that you ask. As long as they answer them all no, you then do a 30-minute phone interview. On that phone interview, it's open book, I always say, because they're going to ask the same exact questions. So you already know what the answers are. The only difference is on that phone interview, they're going to do a prescription check and they are going to do a motor vehicle check. But here's the cool part about this. When you have a client that has the money, you could go through, have a product that you could have approved within an hour of you doing the meeting. You'll be paid generally within 2 weeks of that thing being done. Okay? So, Bernard, we could see if we need to put something together on that. But there you go, folks. Yeah. Think about that. Anybody that you have with some lazy money, let us help you make some quick money.
Yep. All right. So folks, again, any questions?
Yep. Go on, everybody. Hurting my feelings. Nothing?
All right,
no,
guys. All right.
I hope that everybody picked up a nugget or two and they're able to use it.
Oh, yeah. So folks, with that being said, Chris, thank you again, my friend. Folks, we'll be reaching out to you, and let's make this work. So everybody have a great rest of your week. Take care now.
Bye-bye.